The asterisk, important to oil market analysis, has asserted itself again, twice. Any utterance about future developments in oil supply, demand, and price carries an implicit asterisk alluding to a disclaimer. Surprise disruptions to supply can demolish any forecast at any time. Surprises disrupt the oil market regularly. The asterisk exists for good reason. An increase in the price of crude oil that began in the Northern Hemisphere autumn of 2011 ended at the end of winter. The West Texas Intermediate Cushing price peaked at $108.39 a barrel on February 24th. The Brent spot price, FOB, at $128.14 a barrel on March 13th. Prices drifted downward until late in June. Market fundamentals were weak. Demand was sluggish. Inventories were rising. European economies were teetering. The Chinese economy showed strain. A dollar strengthening against the battered euro damped oil prices further. Brent reached its recent low point of $88.69 a barrel on June 25th, WTI at $77.92 a barrel on June 28th. Then the asterisk reasserted itself in two ways, late in June and early in July. Sanctions targeting Iranian finance by the U.S. and Iranian oil shipments by the European Union took formal effect. In prospect for 6 months, neither development was a surprise. But instead of backing away from its nuclear ambitions, the aim of the sanctions, the Islamic Republic revived its threat to limit tanker traffic through the Strait of Hormuz. At the same time, 3 labor unions began strikes against operations offshore Norway. By July 5th, the lead negotiator for oil companies and service firms had called a lockout for midnight July 10th. The Norwegian offshore produces about 2 million barrels a day of crude oil, NGL, and condensate. As much as 17 million barrels a day of oil passes through the Strait of Hormuz. Heightened risk of disruption to that much oil supply never fails to get the market's attention. By July 3rd, the price of Brent had bounced to almost $100 a barrel, of WTI to almost $88 a barrel. Prices eased back after the Norwegian government intervened to avert a strike, but the Strait of Hormuz threat lingers. Lesson: when pondering the oil market, never forget the asterisk. Footnote: the market remains weak. I'm Bob Tippie, editor of Oil and Gas Journal, and that's the editor's perspective for July 6, 2012.